Oh boy, you thought you were going to catch me slipping. 11:30. It is still 11:30. 11:30 check. See? I'm putting it in the chat right now. 11:30 check. We are here. We are on time. Thank you everybody for being here. Really appreciate it. I don't know, Chels. Second place. Ricardo, what's going on? Thank you for being first. PB, what is going on? New York Knicks. I got to tell you, it is very good that San Antonio won because now guess what? They got to go to game 7. Less rested. Diana, what's going on? Tony, thank you for being here. Really appreciate everybody. It is Friday. Jake Rizzo is here. Star is here. Missy Ledger is here. We got the crew here. Oh boy, listen to this. Matt Money, the real Matt Money himself is here. You know what? We're going to reach out and see if we are lucky enough and cool enough. Maybe Matt wants to come on a little later, talk. You know what, Matt? I'm going to send you a link. Come on later, like 12 o'clock, if you're interested. If you're not too busy being Matty Money. Anyway. Han Solo is here. June is here. Big Dog Jello, who we talked MMA with, is here. Really excited. Really excited. This can be a really good day. All right. SaaS is back, everybody. I don't know. Maybe I'm getting a little too excited. Maybe the thumbnail's a little too exciting. But you know what? It feels like SaaS is back. It feels like something's happening. Oh my God. Crude is 87.25. Huh. Who would have thought? 87.25. I thought that wasn't possible. I thought there was no way we were going under 90. Man, there's no way we're going under 80. 87.25. And we don't even have a deal yet. Just wait. We get a deal, oil going under 80. You heard it here first. I've been saying it the whole time. Brent 90.65. Cold 4,600. Amazing. The indexes, everybody. We are ripping 75. I can't even not laugh. 75.87. Everybody thought I was nuts when I said S&P 8,000 with a straight face and meant it. 75.87 on the S&P. You gotta love it. Can we get a Steve is a liar check? 75.87. We need another 413 points so I'm no longer a liar. And do you want to know what that is? 5.44%. What are you telling me? It's not even June yet. It's not June for another 3 days. I'm looking at the calendar. So you're telling me that we got 7 months left and we can't move 5.5%? Okay. We can get a drawdown and still do it. I'm ready. Wait, whoa. What do you mean? Amit does not smoke. What are you talking about? I must know what you're talking about with this. Anyway. Oh, this is great. My wife says all guys are nuts, and we all are. I'm nuts. All right? I am nuts. And I got a funny Amit story, but we're going to wait until hold on. I don't want to share that screen. Let me see what's going on when his stream is over. And more people, his stream just ended. Well, we're going to say the Amit story very soon. Okay, very soon. Early 90s was sassy. It feels like the 1990s. SaaS. Listen, it may not even be 1995. Maybe it's 1993, we got to say. No, bullshit. No, he didn't. He smoked his cig on the market open. No, he didn't. I'm calling him. I am calling him. It went right to voicemail. We're texting him. I am being told that you smoked a cig on the market open. Is this true? If it's true, I'm going to be really pissed. All right. I do not want him to start smoking. Anyway, Lena is here. Lena, guess what? I was looking for you yesterday. I didn't see you. Congratulations. AMD is it was 525. Okay, he did not. Good, don't. He said not at all. You guys are fibbing. Fibbing. He's not smoking. Anyway. All right. Before we get back into individual companies and what's going on. Oh, yeah. Tommy Dimes, I got excited. Thank you very much. Hey, everybody. I'm not a financial advisor. I am not your financial advisor. I have no idea what I'm talking about. Please do your own due diligence. Everything I say are my own opinions. Use this for educational and entertainment purposes only. Thank you, Tommy Dimes, for looking out. Lena had to go into the office. Well, I have so much to talk about with everybody today. But before we get into stocks, I got to tell you a story about last night. So Amit and I shot the latest episode of Basis Points last night. It will be out today, I think 6 p.m. We get done shooting. We shot at 7 p.m. We got done around 8:10 or so. And Amit says to me, I'm hungry. Let's get a steak. Let's get steaks. I'm like, you don't have to tempt me with a good time. So he's like, where can we go? I said, we can go. There's a lot of places. We're downtown. Anyway, we decided to go to Keen's. All right. We decided to go. And I said to him, we may not get in. He's like, what do you mean? I'm like, trust me, we may not get in. We're going to need a backup. And we may have to eat at the bar. It's a Thursday at 8 p.m. and we didn't make a reservation. Keen's probably not getting in, but let's try it. For those of you that know, you know. Anyway, we're walking to Keen's and he sees a Chick-fil-A and he's like, let's just get Chick-fil-A. We're like, no, absolutely not. I said, you just got in my head medium rare steak from a great steakhouse. You don't go from medium rare steak at a steakhouse like Keen's to Chick-fil-A. You don't do it. I said, absolutely not. We're going to Keen's. Be that as it may, we go to Keen's. What happens? Can't get in. We say, we'll sit at the bar. They say, okay. We walk to the bar. Not a damn seat at the bar, at the ledge, nowhere. This place was packed. Hour wait. So then, you know what? I say, we're going to Benjamin's. So we walked up to Benjamin's, and it was amazing. And I am not that person. I don't take pictures of my meals. I don't post on Instagram. Shit, I built an Instagram only for Basis Points. My Basis Points Instagram is my personal Instagram. I don't post shit. All right. I had to do it though, because if you watch the Zeta Basis Points, David Steinberg and I had a little disagreement about the best steak in New York. All right. So I'm going to pull up my X account and I'm going to show everybody what I posted. I thought it was pretty damn funny. So I tagged him last night. And said, so Amit and I just got done shooting an episode of Basis Points, and he said he wanted steak. Luger's was too far, so we ended up here at David Steinberg. I think we need to do a stake tour and settle the debate. And this is what it looked like. Beautiful porterhouse, cooked perfectly, absolutely incredible. Garlic mash next to it. I had the shrimp. Mick got the lobster mac and cheese. Excellent meal. Great company. Highly recommend Benjamin's to anybody that's eating in the city. It's awesome. It's one of my favorite steakhouses. Now, there are two of them actually a block away. The one that we went to was on 41st and Park. That is the steakhouse one. Keen's is incredible. Homestead is incredible. Uncle Jack's is incredible. A lot of good ones. Del Frisco's. Look, I personally think Luger's is overrated. I will say I have not been there in a few years. Maybe I should go again. I felt it was going downhill. And I will go there again. You know what? I'm going to make it a point. I'm going to set something up. I'm going to reach out to Steinberg. I'm going to reach out. Well, I don't have to reach out to him. It'll just go whenever we're going to go. I'll reach out to him and I'll set it up. I got to give Luger's another chance. But you know what? At that time of night, I just didn't feel like going to Brooklyn. I didn't want to get the car, go to Brooklyn. But you know what? It was delicious. So let's get on with the stocks. Let's see where everything is. S&P 7590. If we hit 7,600 on the stream, I'm going to go crazy with the bell. How about that? It won't be any of the little, I'll get aggressive the way Amit does. The Dow Jones, 51,000. Oof. Nasdaq 100, 30,350. The Nasdaq Composite, 27,000. Let's go, everybody. All right. Let's see who's moving. Let's see who's moving. Maybe there's a rotation happening. Oh, boy. Chris Patel has got to be really happy right now. I'm happy. My thesis is playing out. But you know what? Christopher Patel has got to be really damn happy. I thought SaaS was dead, everybody. Do you see this? I thought SaaS was dead. Oh, Service Meow is at 124. IBM 292. Don't forget who bought IBM in the dividend farming portfolio. This guy. Palantir catching a bid. Zeta 2213, everybody. Oh, Salesforce. I thought Salesforce was dead. I thought they were dead. I thought Salesforce was dead. Where's everybody chirping at me now? Huh? I thought Salesforce was dead. It only took a day too late, 9% today. Hoodie-O Hood, 92.58. SoFi, 18.52, up 9%. Oracle, 220. Micron, 964, everybody. Are we going to 1,000? Probably. Snowflake, 249. Reddit, 174. Let's go. Joni, not you. No, the bears that like chirping at me about Salesforce, not you. Microsoft catching a bid, still disrespected, 443. Fortinet, take two. Broadcom, 439. Cloudflare, 234. SanDisk, 1669. NVIDIA, 215. It can't even move 1% with everything else. You know what? Let me look at this again. Salesforce, Micron, Broadcom is up. We got to see. I may have just moved up to second place. Actually, Amit's portfolio is probably doing really good today. Hold on. Let's see. Let's see the stock market draft. We got 2.5 weeks left. Can I make a move into second? No, I can't. Maybe I can. I'm 6% away, everybody. I am 6% away. I was dead last. That's why you can't say it's over until it's over. I was in dead last for half the year. Dead last. I am in third place, 6% away from catching Amit. Amit's portfolio, 1, 2, 3, 4, 5, 6. He's got 7 winners in his portfolio. All right. I only have 3. But you know what? Micron is paying for all my damn losers. And you know what? If Meta can do something, if Bitcoin can catch a bid, we may be able to get to second. If we get a rotation, and I'm not saying I want this to happen, but if we can get a rotation, I may even be able to catch Matt Money. It may be hard. Matt Money's at 73.78%. There's still a chance, everybody. Not saying it's going to happen, but there's a chance. I don't know. You're damn right I got bailed out. You're damn right I got bailed out. This shows so BX, you have no idea what you're talking about. You have absolutely no idea what you're talking about. I will single you out. You can go back and watch the episode. We put 200 stocks on a board, and we spent about 2 hours doing a fantasy draft for a 1-year portfolio that you have to hold for 12 months. And we did round robin style picking, and everybody picked, and you cannot have an overlap. So once you picked a company, it was off the board. You couldn't take it. Nobody's throwing darts. Trust me, we do a lot of research. Nobody's throwing darts. Now, granted, I should have taken Amit up on his offer. I specifically took him's because I thought at the time people wanted it. I was trying to deal it for something. Amit offered me Apple, and I said no like a moron. I was holding out for something better. I thought Tanner or Matt really wanted it, but they didn't. I got stuck with it. MicroStrategy was my second pick. I said, you know what? This is going to be my dark horse. If Bitcoin rallies and runs, this could do something for the portfolio. Looked like Micron that nobody wanted to take, and I took it. Saved my ass. We're going to see. Matt is saying, Steve, you lost. Well, you know what? It ain't over until the 16th. We got 2.5 weeks left. Maybe, just maybe, I can pull out a second place, a last to second. I don't think I'm going to catch you, Matt. But I think there's a chance I can catch Amit. Maybe. You know what? You're 100% right. Second place is the first loser. There are no points for second place, but we are running it back. And the proposal will be out later today to the group, and we'll go from there. Matt Money, you're in first. I already said you're in first. I said you're in first 3 times. We even looked at your portfolio. Matt, why don't you come on? Just come on. Let's have a conversation, Matt. Come on. Rocket Money, 423%. ASTS, Matt is the king of the space mob, everybody. King of the space mob. Yep. AI. Listen, if we ran this back, and what I am going to do is run this back separately to see what portfolio works. I think that mine is the best one for 2020 for the next year, but we're going to do a repick anyway. Let's get back to it. So what's not working today? Oh, damn. Rocket Money down 6%. Nebius. down 2.7%. Venture Global, 1222. Altria Group, 7025. Alphabet, 382. That doesn't make sense. CoreWeave, 105. AMD, 511. You know what, Lena? It is still congratulations because AMD is over 500. You deserve it. Congratulations. Next decade, under 8. Starting to look a little interesting, everybody. Meta Platforms being disrespected. Absolutely disrespected. Enbridge, 54.91. IREN, 63. Energy Transfers under 20. You know what? Energy Transfer under 20. I may add some shares for the dividend farming portfolio. Exxon, Chevron. Not surprised they're down. I am surprised about Amazon. Apple, 311, all good. Now is up, baby. Service, meow, is 124.26. SaaS is back. Let your winners ride. And that's what David Sachs says, right? Let your winners ride. I feel like we're back. I mean, I'm excited. When I see this, I get excited because you know what? A lot of these companies are inexpensive. ServiceNow 124 is still inexpensive in my opinion. Salesforce at 193 is really inexpensive. You can't vibe code away ServiceNow and Salesforce. Now, I do want to show everybody something, so give me a sec. Oh, you know what? I'll get it from my X account. I wrote an article the other day on Artemis, okay? And I know you guys have heard me talk about it, but I went into the beaten down enterprise software trade that the AI bears are getting wrong. May 27th. That was, 2 days ago. That was, Wednesday. And now we're pumping. I mean, I specifically spoke about Salesforce. I specifically spoke about ServiceNow, and I specifically spoke about Workday. I'll drop a link. I still believe there is an opportunity here. Please go read it if you're interested. But I still think there's an opportunity in SaaS. M1 Bobby, that is right. Wet your beak, let your winners ride. I mean, that's one of the best things that David Sachs has ever said is let your winners ride. And I want to get everybody's opinion. Because listen, you guys know I respect your opinion a lot. I shot a SOFI video. I didn't want to do it out the gate. I didn't want to do it right after the interview. I've actually re-listened to the interview several times. And I'm putting out a reflection video about the sit down with Anthony Noto. I'm going to do one with Zeta also. What do you think of the thumbnail? I got a fintech deep dive. I mean, maybe I'll take that out. I think it came out pretty cool. I don't know. I got to play around with Gemini. What do you guys think? I should probably take out AI Party, a fintech deep dive. Should probably get rid of that. Maybe I'll put SoFi My Reflections up there in the pink and then get rid of on and just put sitting down with Anthony Noto and SoFi stock. Who knows? I like the way it came out. Let me know what you think. Google Gemini for you. Just keep the AI party. Too much neon. Listen, I want to go back to the 80s. I want to go back to the 80s. I mean, shit, I was looking at buying an IROC Z the other day. I mean, I think it would be pretty funny if I bought an IROC Z. After I saw that horrible Ferrari, I was like, what 80s car would I really want to drive around? And I was like, you know what? Maybe getting an IROC Z wouldn't be the worst thing that I could do. My wife would probably make fun of me saying that I don't know where the gas pedal is. But, you know. Matt, what do you think? Should I go get an IROC Z? I mean, look at this thing. I bet you I could get one for pretty cheap. I mean, is that not the epitome of the 80s? That or a Trans Am Firebird? And just redo it? Maybe throw like a blueprint blower in here? Like a 408? I don't know. Yeah, T-tops? Maybe I really feel like I should get one of these and just overhaul it and redo it. I don't know. We'll see. Yeah, damn right it's a gas guzzler. I'm with it. I am with it. Those old Trans Am Firebirds were sick. Sick. Let's see. Oh boy. Everybody's going to get a treat. Everybody's in for a treat. Where is he on here? Here we go, baby. Here we go. We about to have some fun, everybody, on this Friday. We about to have some fun. We about to have some fun. I'm excited because I get to talk to somebody that I haven't talked to all week. I'm excited. Thank you, everybody, for being here. Really appreciate it. Charles is incredible. Thank you, Charles. Man, we are running. We are running. Man, let your winners ride. It's a good Friday. It is a good Friday. When this stuff is happening, it's a good Friday. SoFi 1834, I like it. Look, I think that there are companies that are still undervalued. This run today may not last, okay? It may not. We can get a correction. We can get a drawdown. There is no question about that. But let me ask you this. What happens, okay? What happens if we actually get a deal? What happens if the Strait opens up and we actually get oil flowing for an entire week with no disruptions? Magic 8 Ball, would that be good? I mean, everybody knows that my crystal ball got lost in the mail. I had to settle for a Magic 8 Ball that's telling me no doubt about it, and you can't see it. But it was saying no doubt about it. Magic 8 Ball, baby. Oh, here we go. Absolutely. Absolutely, baby. Listen, we get a deal and the Strait opens, watch oil go under 80. If we couldn't go into a bear market with oil at 115, you think we're going into a bear market with oil under 80? Stop it. This could be, get ready for a really nice magical summer. Maybe I wasn't bullish enough at the beginning of the year. Now, look, I'm not going to sit here and say that we can't go under 7,000 because we can. We absolutely can. I just don't know that it's really realistic at this point. I do think that my thesis that I've been saying will play out. I really do. And I do think that there's inefficiencies in the market. I think there's an inefficiency in the market with NVIDIA, with Meta, with Microsoft, with Amazon. Lena is 100% correct. Let's get this money together. I agree. Absolutely. I 100% agree. And this is why I do all the research. It's for you guys. And still waiting for somebody to accept the link. I see they saw it. They will be coming on soon. They will be coming on soon. So let's see. What's the big news right now? Okay, so Trump's Hormuz deal sheet drops, sending stocks higher. Iran must agree never to develop a nuclear weapon and immediately reopen the Strait of Hormuz to unrestricted shipping traffic. Must be immediately open, no tolls for unrestricted shipping in both directions. Trump wrote on Truth Social, adding that the U.S. naval blockade around Iran will now be lifted. Trump said ships stranded in the strait due to the blockade could begin heading home and claimed U.S. forces have already destroyed numerous naval mines through underwater operations. He added that Iran would complete the removal or detonation of any remaining mines in the waterway. We'll see what happens. The street likes it. We'll see what happens. Maybe this does really damn well. Just maybe. Now, what do we do now? I think that's the question everybody's asking. What do we do now? Things are running. Some people think the market's expensive. Some people don't think it's expensive. All I can tell you is that I think there's still opportunities. Now, last night was unfortunate. A lot of people saw the Blue Origin explosion. That is probably why ASTS and Rocket Lab are down. Probably just a minor setback. But there's still avenues. Give me one sec. I'm asking somebody when they're coming because I saw that they got the link, but still not here yet. A little surprising. Let's see. Man, we may get 7,600 today on the S&P. How crazy is this? So I did buy 2 new companies, okay? I bought 2 new companies. We're going to save one of them. But I did buy Uber. What's Uber doing today? All right, it's up 1%. I bought Uber. I think Uber is bottomed. I am going to say I'm calling the bottom on Uber. We'll see if I'm right or wrong. I normally don't make statements like that, but I do want everybody to look at something. All right. I don't even remember if I talked about this or not. Uber looks like it's bottomed around the $70 mark. I'm going to call a bottom. Let's see what happens. It's probably going to dump because I'm calling a bottom. I didn't buy a lot. I started a position. 144 billion market cap. And this is where I start talking about inefficiencies in the market. $10.12 billion in cash from operations, capex $327 million. About $9.8 billion free cash flow. They are trading, what is that? 14.1, 14.2 times free cash flow. I really think this is undervalued. This is generating so much cash. And here's the big thing. What are they doing with that cash? Repaying debt, even though they're issuing debt to repay debt. They're taking advantage of market cycles, but they're repurchasing common stock. In the trailing 12, $7 $2.7 billion in repurchases. Huge amount of cash being generated, tremendous amount of stock being repurchased. If we look at where the street has them going forward, EPS growth, okay, and revenue growth, double digits each year. If they maintain their free cash flow margin, I think they just keep buying back shares. I think they become a super app, and I don't think they have competition. I don't think they really will. I think they're going to control the autonomous narrative. I think a lot of people are wrong on this, and it's just my opinion. Just my opinion. I don't know what it's going to do, but I do think it deserves to trade at least 20 times free cash flow. And if it deserves to trade there, you're talking about roughly 195 billion market cap, which leaves significant upside from here. I could be wrong. But I really like Uber here. It is my newest position. The other one that I bought, save that for basis points. But Uber here is exciting to me. Now, I don't know what's going to happen. But when I run the numbers and I look at what I want to look at in companies, it gets really interesting to me. How do I keep up with 20 plus stocks? This is all I do. Pretty simple. I do not own Robinhood. I'm a SOFI guy. I mean, Robinhood is still very interesting. I am still in Reddit. I am probably going to have to roll my call options today. Hold on a sec. Let me just send a text. Yeah, I refused to buy Hood. I don't know why. I just did. Listen, Star. I'll say Hood is a giant already. Okay? Hood's a giant already. It's not going to be a giant in the future. It's already a giant. Did I see ONDS? Lena, I know that you and a couple other people really love it. I believe it shot the moon yesterday, and it's down 4% today, but it pumped yesterday a lot. I don't know what's going to happen with these drone makers. I have no idea. I hope it goes to 100 for everybody. I'm just not in it. I know. Trump pumped everybody's bags. I'm well aware. Hood with the Trump accounts is going to be big. I'm with you. I never said that it's not going to be. Trust me, I never said that it wouldn't be. I mean, I'm not trying to convince anybody to do anything. Let's keep that in mind. All I'm saying is by the numbers, I think that Uber is inexpensive. SMCI, look, they've had so many problems. They probably will do well. I just don't want to mess with it. Was now pumping again. Let's take a look. Market dashboard. 123.63. It's up 13.7%. I mean, PB. I don't want to get political, but if there's another president on a bill, I mean, in all seriousness, it's going to be one or two people. Just what is what it is. If we put new currency into circulation, I would say that the next president that will be on a bill, whether it's 250 or 500 or whatever, would be either Obama or Trump. I don't think that any other president would be on the bill going forward. So we'll see what happens. Chris, if you can hear me, just give me a thumbs up if you're good. I saw your, yeah. Chris, if you can hear me, just give me a thumbs up if you're good. Thumbs down. Okay. It is that simple, in my opinion. I mean, they're probably the two most popular ones, so who knows? But this isn't a political show. So honestly, I really don't give a shit. How about that? I really don't. Anyway. IBM, yes, IBM's running 291. I actually wrote an article about IBM not too long ago. I am very bullish IBM. Vive is on the move also. Thank you for the super, Mr. Casp. Really appreciate it. SaaS is on the move today. Now, look, SaaS can reverse. There's no question about that. But wait, is Wealth in here right now? Wealth, if you're in here, I reached out to you on X. Check your X. I didn't see him in here. All right, let's take another look at where we are before we have a special guest come on and we get into it. The Zeta Crew, 2204, the Zeta Crew. Listen, go listen to the interview with David Steinberg. I think that you'll see. Okay, Zeta is very interesting. And now for our special guest, Chris Patel. I did not bring you on before as I saw you had a visitor in your office.
Yeah, it was my wife. She was we were doing the happy dance. If you weren't such a stickler about your copyright, I would actually play the song.
Yeah, no.
The Jeffersons. Me and her were playing the Jeffersons song with my brother.
Oh, you showed her what you did?
Yeah, my wife knows. Well,
listen, let's not talk about it, but I know what he's talking about. How happy are you? I said in the beginning of the stream, Chris Patel must be so fucking happy right now.
Look, the money is great, but I feel vindicated. That's more important because the challenge you always run into, especially with the strategies that I run, I'm a mean reversion guy. So what happens is I tend to find the companies that I know are overcorrected for no reason, and I lean into them, and I lean pretty heavy, right? So over the last literally 2-3 months, everyone's like, "Oh my God, you're not in any of the AI data center plays? Like, are you stupid?" And so you kind of have to just say, "Look, man, if it's working for you, that's cool. It's not what I'm looking for. I'm looking for something else." And the thing is, the strategy that I've used, it's worked for me in the past, and so I feel more confident in it. So the thing is, it's hard to develop what's the word? It's hard to develop conviction on someone else's thing. And the thing is, last time with BM&R, I borrowed a lot of your conviction. And so, I was like, oh, this is good, blah, blah, blah. So I'm like, I realized one of the reasons why, it didn't work out as well for me is because I fed into other people's conviction and then I just had to sell it, But I felt much better. I felt much better after I sold it. So I realized, you know what, Chris, you're a good investor on your own. Just stick to it. don't chase the other names, you know. And like I said, this is not a shot at anyone who made money in the market via any of the other plays. Look, everyone here is going to have different strategies that's going to work for them. Some people are going to be value focused people. Some of them are, you know, momentum based. Some of them are, you know, chasing the indexes. So whatever works for you is the way that, you know, you should play these opportunities, you know.
I mean, SaaS is ripping right now. I think people finally realized, and it's funny that Salesforce didn't run yesterday. I think people are really realizing these companies aren't going away. ServiceNow is not going away. Salesforce is not going away. I mean, Salesforce is up 9.5% today. I thought Salesforce was getting replaced. I thought ServiceNow was getting replaced. It's up 13.3%. And I still think these two companies are cheap. I still do.
I mean, we both kind of mentioned it like literally for the last like 3 weeks. It's like,
Yeah.
You're not going to rip out a decade plus worth of your own data and try to reassemble it in something that's vibe coded. The other thing is, I think what really set this market on fire right now with regards to SaaS is that people came to the conclusion after spending all of this AI, you know, all these AI tokens on trying to vibe code something, that when you try to vibe code something, you're basically going to have it create a mistake here. And that mistake is going to lead to 4 more mistakes here. And that 4 more mistakes are going to lead to here. And the amount of time, effort, energy that's going to take to actually build a platform is not as simple as Grok or Claude, build me a ServiceNow replacement, you know? And I think even the whole notion that a lot of these companies could lose in the AI world because there's going to be seat-based compression. I'm like, you don't think these guys can layer on agents into their core offerings and just basically upsell a little bit of stuff? Like, yeah, maybe they can't get as much money in just pure subscriptions, but they just hybridize their business and say, look, if you want to have agents running things, pay us a little bit of a fee and you get all the benefits. So now you've got a hybrid model and you're making money. And at the same time, the cost of intelligence is going down at a rapid pace. So it's like, I don't know. To me, it was like best of both worlds. If your input costs are going down by the day, if your ability to basically lock people in even more than what they were previously is going up, I mean, that's a pretty good catalyst. And ServiceNow was one of the ones that really, really leaned into it last quarter. And I think the market's kind of recognizing it a little bit right now. So it's good. It's good. By the way, I don't know why, but do you have like the AC on or something?
Yes.
Okay, that's why. That's why I hear it.
So hot in here.
Okay.
I got to figure out a cooler way to cool this room. That's this weekend thing. So I want to go through. Did you go through Salesforce's numbers by any chance?
Yeah, they're good numbers. Yeah.
So
I mean, they're doing what they're doing basically. Yeah, I mean, sure, there were some partial weaknesses here and there, and they're not growing at the 20% rate that some of these other mature businesses are. But you're talking about a freaking gigantic base.
Yeah. Well, one of the big things, and I really think, even if this isn't the reason, I really think Benioff's conference call sucked. But I think the numbers were so good and it told such an important story. And it was the final nail in this SaaS apocalypse bullshit that's going on. Because when you look through this, they are not a small company, as you said. And they grew at 13% year over year. That's incredible for a company of their size. Their subscription revenue grew 14%. And their current remaining performance obligations grew 14%. Their total RPO grew 11%, and it's $67.9 billion. You do not get a RPO of $67.9 billion if the product is being vibe coded away. Free cash flow, $6.6 billion. And then the AI numbers. Agentforce and Data 360 up 200% year over year, $3.4 billion. Agentforce alone, $1.2 billion. Data 360, $2.2 billion. This company is increasing everything across the board. Slack AWUs, 350% growth quarter over quarter. The token volume that they're
wait before you go further. Look, all the stuff that you're saying is great. Okay, it's you have to put everything in context for people to understand, because you have to put it into valuation. Like someone in the comments is saying 13% is not impressive. And I have to push back and said
Same here.
13%, what is the base? Like if you're talking about a company who's a $1 billion revenue growing at 13% and it's worth $50 billion, look, that's probably not the greatest place to be. But if you're talking about a company that's like the size that is Salesforce with margins that are as good as Salesforce, and they're growing at 13%, you're talking about a really, really good return for shareholders. And then especially if it's sold off 50-60%, the amount of buybacks they're going to be able to do to generate shareholder value is crazy. So
People don't look at business 101. And it's one of the things that you and I look at all the time, and it pisses me the hell off because
yeah,
so many people sit here and they only look at revenue growth and, oh my God, revenue growth 69%, 79%, 89%. Yeah, but like Chris said, what's the base? I'm in Zeta. I'm really bullish Zeta. I think their Q1 revenue growth was 67%. And I'm using Zeta for a reason because I own a lot of shares of it. But think about this, off of what base? They are
yeah,
nowhere near as big as Salesforce. Salesforce is not going to grow 67, 77%. Them growing at 13, 14% off of their base, this is a company that's going to do $46.5 billion of revenue this year, and they guided to $60 billion for 2030.
yeah,
You have to put things in perspective. And here's my biggest gripe with the market. When did free cash flow become irrelevant? I mean, there are companies that are not profitable that are 50 billion plus,
yeah,
yet Salesforce does $14.5 billion of free cash flow and they were trading at 12 times. That doesn't make sense. At some point, you got to call a spade and say, you know what? Based on the profitability, this shit is cheap.
yeah,
And Salesforce has proven they're an AI company. They are proving through the token volume, 28.6 trillion tokens processed to date, 152% quarter over quarter. And here is the biggest number that I think people missed. The Data 360 ingested 52 trillion records this quarter, 136% year over year. You're not ingesting 52 trillion records and growing that number over 100% year over year if people are leaving the platform. They process 12 terabytes of unstructured data, 1 trillion API calls across their core products. This is a company that is not getting vibe coded away. And to answer somebody's question, I don't give financial recommendations, but I will say that I'm still interested in buying more Salesforce because I think it is cheap for the profitability that they produce.
yeah. I think a lot of these SaaS names, I know people are saying, is it too late to get in? I personally don't think so, only because these are strong business models with share buybacks. Like if you look into their business, it's pretty much an up into the right business, right? So at some point, do they slow down? Yes, all of them are going to slow down naturally to that 5 to 10%. But the thing is, if you're a shareholder, just because the 5 to 10 on a huge base, they recycle a lot of that capital back to shareholders via share buybacks. Look at the share counts. That's what's more important. So from a valuation standpoint, saying something is expensive, something is not expensive, to be honest, it all really comes down to market perception and narrative. I personally love investing when the narrative is really piss poor, but the industry is not showing even a remote sign of what they're saying. We saw this half a dozen times in the last 5 years. Regional banks are dead. Everyone get out of regional banks. What happened? Regional banks 6 months later were freaking rocking higher, right? Search is dead. Google is over. AI is going to replace Google. Okay, what happened there, right? Oh, social media is dead. TikTok's going to kill Meta. Everyone's going to just be on a Chinese app all of a sudden. What happened there? Exact opposite. I mean, how many times does this keep happening? All the time. Cruise lines are dead. No one's going to go on a cruise anymore. Okay. Freaking thing 10x on most of these people. So it's like, I don't know what to say. Even like the latest one, this whole whatever. When the market gives us opportunities, you take them and just relax. UNH, remember that bullshit? Healthcare is over. Everyone's just basically gonna start, I don't know, go free balling with health anymore. No one needs healthcare insurance anymore. Okay, see what happens, you know.
There's always hype in the market. There are always inefficiencies in the market, and there's still inefficiencies in the market. And look, Chris and I tend to be a little bit more conservative in our investing, and there's nothing wrong with that. Am I in Nebius? Yes, I've been in it since $70. Tanner thought he had a lower share price. He probably owns more of it than me, but I think he was surprised I got in at 70. Now, I didn't load the boat on it, but I have a decent position in it. I'm not opposed to buying those types of companies by any means, but there are also companies that are just too inexpensive and the profitability sticks out. And I think that the SaaS narrative created one of the biggest opportunities that we will see over the next couple of years. And I think the rebound is just getting started. Keep in mind, look at a 5-year chart of Salesforce. Look at where it was. You're telling me that it can't get back to at least where it was over the next year? It may be able to. Tell me ServiceNow can't get back to 180 or 200 with the growth that they have and their ability to monetize agents? Yeah, they may be able to. Tell me that Workday is going to get replaced and we're going to use vibe coded stuff for payroll? Not likely. I mean, it's just, there's really no way that happens. So I think this was one of the biggest inefficiencies we've seen in a long time.
I mean, to be fair, man, this is just part of the market cycle. The key is, can you basically counter against the narrative that's being pushed out there, you know? And when things are bad, like someone saying OWL is an easy 50% for me. I agree, probably. Private equity is getting shit on all over the place right now. It makes no sense. Like, oh my God, the software that they invested in is overvalued. So, you know, the underlying fund is not valued, but I want my money back. And so, you know, you get these little bits of redemptions and then people get all like stupid with it. 2 years later, you look at this industry and it's like, nah, we're good. Like, rich people need to park their money somewhere. They're looking for that 7, 8, 9, 10% return per year. You know, if you got $100 million because you sold your business, what are you gonna do? You think you're gonna go on Robinhood and start managing the money yourself? No, you hand that shit to private equity. Private equity layers that money all over the place. They get a nice little cut. You get a nice little cut, and you stay wealthy and, you know, eat bonbons on the beach. You're talking about trillions upon trillions of dollars all over the planet right now looking for a home. And a lot of these guys, they've been trusted to take care of people's money for almost 100 years. Will there be some that don't pan out? Absolutely. But most of them are going to be just fine. KKR has been around for 100 years. They're not going anywhere. Apollo, Ares, all of these guys have been around forever. They're not going anywhere. The one that I'm putting my money on is TPG. If anyone knows about TPG, they'll understand. You know, so private equity, private credit, it's not a bad place to look. I wouldn't necessarily go head first into any BDCs, you know, because they've got structural changes, structural issues that they have to. But if you're at the equity sleeve of a amazing returner, you gotta just buy it and never look back.
Yeah, I mean, private equity is interesting. I am the BDC route with Ares Capital and OBDC and FSK. I like the dividends. I think they're going to be fine. I added to ARCC not too long ago. But you know what? There's always opportunities in the market. I don't think SaaS is done. I think that this is going to keep going. My own opinion, we could definitely retrace. People may take profits on Monday, but feels really good today, and I really hope this is the start of a re-rating up because it deserves it. It did not deserve, and maybe people just pulled capital out to go into these AI names. Maybe that's what happened, and maybe capital rolls back in. Capital does not have to come out of the AI names. Capital can come from energy. There's over $8 trillion on the sidelines. Capital can come from the sidelines also. I think these SaaS names still represent value, but I also think there's other companies that can do the same thing. I mean, I'm not sure.
I never once thought in literally the last 10 years that we would be able to get SaaS names with strong cash flows like this at the discounts that we got. Like it just didn't, it never even came to mind for me that we would be able to do that. But dude, whenever you get these crazy like discounts, you got to run into them, you know?
So let's really think about what Chris said. Salesforce is a company that's still down basically 20% over the past 5 years. Okay. So if you think that this move is the end, it's not even where it was 5 years ago. Now, keep in mind, that was the 2021 fiscal year. And I want to show everybody now, Seeking Alpha does not update the market cap real time. So let's say the market cap's 160 billion for argument's sake. Okay. Maybe 170. But let's really look at this from 2021, please. 2021, their revenue was $21 billion. What's happened since then? Why doesn't the slider work? Anyway, 21.2 billion. Oh, 26.5, 31.35, 34.86, 37.9, 41.5 billion in their latest fiscal year. And now in the trailing 12 that they just reported Q1, 42.8. Every year, sequentially, it has grown. And then you look at what they're doing with cash flow. The cash from operations just goes up. 6 billion, 7 billion, 10 billion, 13 billion, 14.9, and now 15.2. The cash from operations just goes up. And what happens? Oh, CapEx actually went down. CapEx has been declining since 2023. Oh. So better free cash.
Where's all that money going? Where's all that money going? Right back to shareholders.
They've repurchased 4 billion, 7.6, 7.8, 12.9, and now $37.8 billion worth of shares. And they still have 25 billion left on the buyback authorization. And Benioff is still buying shares here.
You want to know something that a lot of the SaaS names, they get a little bit of heat. Everyone looks at that SBC number. So go back up to CRM and just look at their SBC. So people, they get pissed off looking at stock-based compensation and saying, how dare you guys give this much money away in stock-based compensation? And I always find it funny where
look at the net income though.
No. What I'm trying to say, Steve, watch. I always say to themselves, if you look at the stock-based compensation, that is a backward-looking expense. That's one of the reasons why you adjust for it out. Why? If you issued a bunch of shares to employees at $400 a share, and now all of a sudden the stock is $100 a share, and you're buying back those shares at $100, do you know what you effectively did? You basically paid someone in monopoly money and then bought that thing back at a huge discount. So it works in a very weird way where people will look at the SBC and say SBC is a problem. But then I look at it, I'm like, well, what is the cost that they paid this SBC out at? If they paid this SBC at $400 a share RSUs and the stock is down 70% and they're buying it back, that means that literally they paid these people on a cash basis, $100 a share, not $400. That's why if you look at the share count, it literally goes up this way. These discounts come, and then the share count just absolutely sinks.
Look, I don't have a problem with SBC by any means, especially when, share-based compensation was 3.55 billion and they have repurchased
37 billion.
$37 billion worth of shares.
They just repurchased 10 years worth of share compensation.
I don't have a problem with it. I just don't. Look, this is, it's still an inefficiency. SaaS was dead for single point software companies, in my opinion, not enterprise grade. And I think there's still an opportunity here. I just think you got to be selective and really
Yeah.
understand the businesses. And look, one of the reasons I have tried to hammer this point home and really have gone off the deep end on this. I mean, look, I wrote the article on the 27th before all this happened on Artemis about why is this not adding? There we go. The bean down enterprise software trade that the AI bears are getting wrong. This came out on the 27th. None of this happened. Salesforce didn't even report yet. And the reason that I've been going so gung-ho on this is because I'm the one that ran the RFPs for these companies, for these exact companies. I've negotiated against their reps. I've redlined the contracts. Like, I understand what the implementations look like because I'm the one that ran them for the company. And these were not small contracts. I understand the back end business with the SOC 2 reports and dealing with the auditors because guess what? I was the one that dealt with the auditors. So when I tell you that I'm laying out the playbook for you without telling you what's in all the stuff, there's real reasons why you can't get rid of these platforms for vibe coded software. You can absolutely get rid of a Workday for an SAP or a ServiceNow for another company, but you're not getting rid of them for vibe coded. So it was just the biggest inefficiency I've seen in a long time. And I think the question now is, what's the next inefficiency that we're going to go hunting on? So I don't know if you've thought about that or not, but I actually made a play already.
It'll present to me. It presents itself. I'm not looking to sell anything. I'm pretty well positioned for this year. I sold out of my UNH position at a great time. I said, look, I milked most of the position already. It's still got upside, but in terms of like asymmetric return potential, I was like, we're good. I made my money. I'm good. I don't know where the next mean reversion play is. It could be in private equity. Once people wake up and private equity keeps delivering, it'll be fine. I think one of the reasons why private equity got sold off was because of their exposure to software. Now that software is back in fashion again, private equity might get a bid again. It's like, whoa, wait a second. I would say the thing to be cautious about and be careful of is some of the more speculative semiconductor names that have been basically running, not because the underlying businesses are strong, but mainly because they're part of like the supply chain. And I see that where there are probably some critical companies that are really, really critical to, everything that's happening with AI. But then there are some that are just like sub $25 million in revenue. And now they're all of a sudden trading at like 5 billion or 6 billion because they have some kind of like X thing coming. And, a lot of times that deal may or may not present itself. And so, like I said, that's where I'd say apply some caution. I mean, there are AI winners that you could just pick. I mean, you're not going to get like crazy asymmetric returns, but if you want exposure there, you could buy the Marvells, the Broadcoms, the Nvidias, that even if there's a correction for some reason because people like, oh, maybe we need to cut back on AI spend, and all of a sudden these guys fall apart, they still have strong businesses that they'll be able to, to lean on and buy back a bunch of shares and recover their share price value. So I'd say we're at the point where we just need to wait until the market gets stupid about another industry and just buy the dip on the industry. But the key is to wait for that industry to get to that level. Like for me, I had personal experience with ServiceNow. So I'm like, do you know the level of effort that it would take to remove ServiceNow?
Crazy.
It's next to impossible. Like, so
You're talking about workflow management for your organization. You're talking about where every audit trail for every ticket resides. It is so difficult. Now, it's not impossible, but it's very difficult.
thank you.
I know Chris sold out of it, and I don't think you ever shared your opinion, but what do you think of UNH over the next 6 months? I don't follow healthcare. I'm not going to comment. I know nothing about it. It's not something
I'll tell you exactly what I said to everyone who's asked me. There is a certain point of risk that you can take while being in the healthcare insurance industry. And if it gets really, really oversold, it's worth buying into. But then UNH and a lot of these guys, they run into the risk of political backlashes. So what I mean by that is these are things that you can't predict as, you know, a person, like as a business, right? Let's say right now you've got Republicans, Democrats, midterms are coming. The one thing no one is thinking of right now is healthcare. But November comes along, and you know what happens around November? Open what is it called? Open enrollment. So what do you think all of these politicians they do in the midterms? Oh, I'll lower your healthcare costs by doing X and doing Y and doing this. And so a lot of times these political like, look, whether you're a Republican or a Democrat, both of them agree on one thing: healthcare expenses are too high. Right now, one of the things, the easiest people to blame are the health insurance companies. So I would not be surprised if we see some sort of regulatory issue come around and the market goes right back into, oh my God, the world is falling apart again. And so I would say the amount of juice that's on the upside, it's not worth the risk. It's not worth the risk at $400 a share for UNH. I think they still have some structural issues that they got to get over, but the easy money was riding this thing from 230 to something to like 300, 375 and 400. Like that is an ideal target. So I would think United Healthcare at this current part is actually fair value. Okay. Do they have upside from here? Absolutely. I think they have upside. They've got a ton of money for share repurchases that they're going to be doing over the next couple of years. If they get some good regulatory changes out of the way, sure, they could do well too. But in my opinion, it's probably going to give you like a 10, 15% return from here. You know, it's like NVIDIA. NVIDIA is a $5 trillion company right now. Like, what do you want? Do you really think that they're going to do another 100% growth over the next year? Like in terms of market cap, it would be a $10 trillion company in a year. Like it just, once you get to a certain size, you just got to understand what you're looking at. So
I'm not sure if you heard my latest purchase or not. I made it yesterday, I think.
No.
Uber Technologies. I'm taking a position, or I took a position in Uber, and I am planning on building it out. And I have a pretty simple thought process on this. So I want to show you this. If we look at Uber,
Tommy, be careful of Clover, man. They haven't been able to make money in a long time, and I'm not sure that they will. If anything, Oscar probably does a better job than they do in terms of ICRA. So, but like I said, you got to do your own research on that. Don't rely on me to give you advice on Medicare Advantage, because Medicare Advantage is like, it's like Chinese math, bro. It's
anything can happen with that stuff.
Yeah.
So I never call bottoms. I'm calling a bottom on Uber. I'll probably be wrong, but I am calling a bottom on this. I think it bottomed around 70, 144 billion market cap. Keep that in mind. Financials, cash flow. Once again, my favorite metric, free cash flow. 10.12 billion in cash from operations, 327 million capex, roughly 9.8 billion in free cash flow. They're trading at roughly, call it 13, 14 times free cash flow. And they're buying back a ton of stock, $7.7 billion in the trailing 12. I think Uber, when I look at this, I look at the valuation. I think anything under 20 times is cheap for free cash flow on a valuation metric. The street is expecting revenue growth every year in the double digits. And I think that Uber has the potential to become an even bigger app. They're getting into freight logistics, and Uber Eats is growing. I think the whole idea about the cybercab is a bullshit, lazy thesis about why Uber is going to die. Uber has all of our data. Whenever I call an Uber, I don't wait more than 2 minutes. I'm in the largest city in the country, and I don't wait more than 2 minutes. I'm not switching to a cybercab app from Tesla and waiting. There's no way that they're going to be able to match the speed of delivery from Uber. And I think it's more likely that the cybercab.
I'll push back. I'll push back a little bit.
All right, this should be good.
I'll push back a little bit. If the other product that's supposed to compete against you is slightly better, I think you would be 100% right. But from what I've seen and heard from people, especially people that live in the Bay Area and people that live in certain areas of the country that have been using the Waymos, like, you know, Google's autonomous, that those things are very popular, like a lot popular, like hugely popular. So in terms of like disruption risk, I find that it's probably more likely than not. And it's not necessarily that like, we'll just do two scenarios. Best case scenario, Uber commands a decent market share and they continuously keep growing, but they're gonna, you know, be there. There is no breaking the narrative. On the other hand, they could be the next typewriter thing, you know, where basically their industry is being competed against from there. So I would say focus on interviews of people who are using those autonomous cabs, not your own personal experience that's going to bias you. If you're relying on your own bias, I think that's a
Yeah,
failure.
but why wouldn't Uber become the platform for autonomous? They already have the customer data for everybody and everybody uses it. Why wouldn't those come on? Like if I'm going to buy, think about it, if I buy 10 cyber cabs, why wouldn't I just throw them on the Uber platform?
Well, the Uber platform is something that you have to remember that it's going to cost margin to the autonomous taxi driving companies, right? Like Google and Elon SpaceX, I mean, or Tesla. Like eventually, we're going to stop saying Tesla. We're just going to call it SpaceX if they merge. But no one is going to want to give up that margin. And if the only thing standing between you and giving up that margin is your own app, I hate to say this, you're going to create your own app. And while initially a lot of people can be on Uber, they're going to promote the shit out of their own thing. And they can even discount their own thing. You know, oh, if you do it through Uber, it's going to cost you 10% more. If you do it through our app, it's going to cost you 10% less. I mean, right now, anytime I go into an airport and I'm driving, you know, like I'm taking an Uber, the first thing I do is I go on Lyft and I see how much price is on Lyft and I look at on Uber, and whichever one is the cheaper one is the one I go with, right? If autonomous is the same thing, if I look at it and the autonomous taxi driver, it's like, yeah, to go from X to Z, it's going to cost you $10. And then I look on the autonomous app and it's like $7. I'm like, fuck it, pick the $7 one.
So I get what you're saying. I guess I'm looking at it from I'm lazy as shit. I don't have Lyft on my phone, nor do I care about Lyft. Uber is just, it's everywhere I am and it's always there. And to me, the accuracy of being able to get something in 2 minutes for me, my time is valuable. I value my time. I'll pay up.
Yeah, but the Lyft is 2 minutes and the Uber is usually 2 minutes. Most of the Lyft drivers and Uber drivers are the same guys. They're on the same thing.
But Lyft is not nearly as big as Uber. It does not have the infrastructure Uber has. And the narrative about why Uber is down is because cyber cabs are going to replace it. My whole thing is, why wouldn't they just be on the Uber platform? You're telling me that Uber is not going to have an autonomous side to it?
But Steve, once again, by hosting it, what you're going to essentially do is you're going to have to give up margin. You're talking about a business that's probably going to have very razor thin margins to begin with because you're always competing against everyone else. So it's not something that you want to give up. This is definitely a margin opportunity story. Like the amount of money that you have to spend on incentives. Like you go to Southeast Asia and you go to Grab, right? Grab is like one of the major ones there. Yet, if you look at their P&Ls, they're never really that great. Why? Because they have to keep fighting for that damn customer. It's the same thing. Uber's going to run into the same exact problem where they're going to have to compete against Google. And by the way, Google and Tesla, they can run negative for a decade without blinking to kill Uber.
But why wouldn't Google throw their Waymos on the Uber platform?
I'm sure initially they will. And they will gladly.
Uber is also doing hotels. They're also doing courier services. They're also doing groceries, UberX, food. They're doing everything. They are becoming the super app for everything.
if that is the thesis that you want to go with, then I agree with you that, hey, look, maybe there's like other components of the Uber platform that are very unique to them. That's something that you can't just autonomize with a taxi cab. Or like right now, what you just said, delivery. That's absolutely a real business. Like, I don't think that a robot can deliver food as good as a human can. Like, I live in a condo that's 3 floors up with an elevator. I don't know any single robot that's going to be able to come into my building and navigate all the hallways and all this other stuff just to get me food to my door. Whereas a human comes right to my door, plops it right there. So if that's the core business that you want to bet on in the future, by all means, like, I think that's fine. I don't think that's actually defensible. But
Yeah,
on the other hand,
the core business
yeah,
is that they have the moat on users. They continuously expand how many people are using the app, and they do everything from auto to ride sharing to shuttles to food delivery and everything else. And I think, and it's just my own opinion, that people really believe autonomous is going to shut Uber down, yet Uber has a ton of offerings in that. And if I believe that that's a narrative that's going to shut it down, or if I believe that that's the narrative people think is going to shut it down, and I actually look at what they're doing, I think they're going to be the biggest player in autonomous. And when they have 10 billion of free cash flow, it looks inexpensive, and they have the money to do whatever they want. They can
yeah.
compete just as much as Tesla. They generate more free cash flow than Tesla.
I would say this. I would say this to you regarding this. If you're playing this as a value play, I think you're probably onto something. I think you'll be right.
It's a value play. This is not a
Yeah.
growth play. This is a value play for a company that is still growing, that is misunderstood because people are writing this off because of a cybercab that's not even here yet. They're writing it off because of a Waymo that's not even in 50 states. And they're overlooking the idea that Uber will be a huge player in the autonomous area. They're just overlooking.
I'd say to you, just keep an eye on Waymo, because the way that these guys are expanding, I feel like every other day they're hitting new cities, they're hitting new like geographies. And one of the limitations that you run into, and the thing is, it's the same thing that happened in 2015 when Uber first came around. Like, the concept was still very foreign, but once people's behavior started to change, it was a very rapid adoption. And that adoption curve was so freaking like crazy. Like, the bar was so low. It was amazing. So right now, I think you're absolutely right in that there aren't necessarily like enough people utilizing this thing to make it something that's like in your face. But from the reviews that I've heard and I've seen with people using these things in other parts of the country, I gotta say, it doesn't look good for Uber.
And we did have somebody in the comments a couple of weeks ago that used the Tesla service in Austin. She said it was phenomenal, it was cheap, et cetera, et cetera.
Yeah.
Look at this, 700,000 plus hotels on the Uber platform now. Uber,
but that's on Expedia. That's on like Booking.com. That's on it's on Google too. I mean, like I said, you're absolutely right to point that out.
This is becoming a super app for like everything you need right now. We'll see. In my opinion, it's undervalued and it's going to keep growing. The question is, does the market reward it? I think this is something that has a moat around its free cash flow, and I don't think it's getting cheaper than it is now. So this is my next rebound play.
That's right. That's a good. I would tell you this: pick the industry rebounds. Those are much easier than trying to pick individual rebounds. Like, as an example, you look at like Nike. Nike is falling apart right now, but that's a Nike problem. There are other companies in the branded space that are doing okay, But when you have the entire industry start to take a nosedive on a narrative, that's like, I don't know. I personally would rather look at other opportunities, but Uber is not a bad company. I've had Uber in the past, but I also sold Uber too. Like, when Uber was like $20-$30 during the pandemic, I had a episode with, what's his name? Like, I forgot his name, a while back, and Uber was great. But then when Waymo came around and they started to really pick up. Now, here's the thing. If Waymo's NPS scores were terrible, I would agree with your thesis saying, these robots, they can't do shit. They're not worth it. It's not. It doesn't turn out that way.
I want to show you something outside of Uber.
Mm-hmm.
The other one that I'm playing, this is not original. I've been talking about this for a while, but I don't think I've actually showed you the side-by-side comparison. You're a shareholder of Microsoft, right?
Yeah.
Okay. I think Microsoft catches a huge bid. Here's why.
Agree. 100% agree.
Apple has a market cap of 1.27 trillion more than Microsoft.
Yeah.
Let me say that again. $1.27 trillion. Now, Chris, take a look at this. Apple generates 451 billion in revenue, Microsoft 318.
And Microsoft's still growing at the top line and bottom line.
Yeah. What happens with profitability? Read me these numbers. For the gross profit, EBITDA, operating income, and net income, who generates more, Microsoft or Apple?
No, Microsoft, bro. No one can deny that Microsoft is a much better opportunity right now than
who
Apple.
has better margins outside of free cash flow because Microsoft's spending like a dog? Microsoft.
It's Microsoft.
So they have better margins. They generate more profitability off of less revenue, yet their market cap is 1.27 trillion less than Apple. Oh, and by the way, if we look at forward growth from the analyst estimates on just these two, not only does it generate less revenue and more profitability, its EPS growth is an extra 15% over the next 2 years, and it trades at, I don't know, 40% of the valuation. Like, at what point do people wake up and say, you know what, Microsoft should probably be fair value more like 550, 600? At what point?
No, I'm in 100% agreement with you, dude. Microsoft, Mr. Softy got sold off because of this whole vibe coding nonsense, this SaaS apocalypse. So
did you just call them Mr. Softy?
Yeah, I love it. Like, it's MST, MSFT, so it's Mr.
That's
Softy.
Great, Mr. Softy. Love it.
Mr. Softy got sold off because of this like SaaS apocalypse nonsense. But now that the SaaS apocalypse narrative is going, Mr. Softy will catch a bid. Don't worry. It's stupid. I did something on Claude. It's like, do you want me to do an Excel for you? I said, sure. And then I went to it and I'm trying to get Claude installed on my Microsoft Excel and it won't let me. And now I have to go and look at my subscription for like 365. And I'm like, God, I fucking hate paying Microsoft this 365 like subscription. But I goddamn need it because I have so many things people sending me stuff and I'm analyzing things and I'm utilizing it. Like, I tried transitioning to Google Sheets and I really like it, but the amount of stuff that I have that's already like Word and Excel and everything else, it's just like,
I like it for certain things. I like Google Sheets for certain things. I like it for the graphics. Let me get to some of these. Mr. Casp, can you guys check ACN? It's very cheap.
Accenture is going to be fine. Accenture is going to be fine. People forget you can't just do AI. If you look at the number of contracts that Accenture has signed to try to integrate AI into all of these businesses, it's freaking amazing. It's freaking up and to the right. If you look at the number of people that you're going to need to basically manage all these AI agents, it's going to go up and to the right. It's literally, this is like .com all over again, where everyone thought, oh, computers, we're never going to need people anymore. Computers are going to do everything. And it's like, who is going to repair the computers? Who's going to install the software? Who's going to write the code? Who's going to freaking, it's like entire industries are going to be born out of AI. All right. And Accenture is going to work with all of these businesses to integrate stuff in there. So if you guys want to just look at something, look at Accenture and just type in, I think either OpenAI or Anthropic, because they're partners now, because they wanted to get all this integration stuff done. So
having worked with Accenture, I can tell you that my experience was nothing but good. There's a reason that they are a top tier consulting firm. They do a lot of things. They're just a great company. So
I'd say just the one thing with Accenture is that they have periods of up and down. So I don't know. I'd say just this narrative that they can be taken away. I don't think that's happening. Chris, Uber would still have higher margins on Tesla, Waymo, even if they have to give revenue share, because they save on not paying drivers. Right. But at the same time, why would Waymo and Tesla give anything to these guys?
Yeah, we don't know what's going to happen in the future. Getting rid of the human driver does save expenses, but we got to see how it plays out. I think that there is a argument on both sides. Chris made a very good argument against. I think there's an argument on both sides. We're just going to have to see how it plays out. The reality is it's generating close to 10 billion free cash flow. It looks cheap, and it's in an interesting position.
Someone said, what about once everything is integrated? Then what? There's never a point where everything is integrated. That's the other thing, because new shit is always coming out.
Guys, it's 2026 and companies are still implementing cloud.
80%. Yeah. 80% of everything is still on-prem. Hell, if anything, there's still banks running their shit on mainframes. Okay.
Oh yeah.
Like, you're talking about, like, if this is a melting ice cube, it's gonna be like the slowest melting ice cube that you've ever seen in your life, dude. And like I said, these Accenture, all these guys, these system integrators, when they come in, it's not just as simple as, okay, here's AI, enjoy. Like, no, it's like, okay, this software comes out, they do work on this. Another software thing comes out, another module comes out, they come and do that. They go around, like, then there's all this maintenance shit that these guys have to do. It's not as simple as, what if everything just happens overnight? I can tell you, it's going to take decades upon decades. And then guess what? You have the entire planet. It's not just the US, it's the entire planet. Sorry, I think I was
running on
too much.
One more FSD EULA to put the vehicle on any platform that isn't Tesla. Waymo can't make enough cars to saturate a market like Tesla. I will agree with the fact that Tesla can probably out-manufacture Waymo. So we'll see what happens. Let's do a check right now. Let's see where everything is. All right. We are going to go into the weekend probably in a very happy place. The Dow is at 50,994. The Nasdaq is at 27,000. The S&P 7586. On a per share basis, we are seeing a rotation into tech. ServiceNow, 13.41%, 123.31. Robinhood, 93.54. Oracle, 222. SoFi, 18.53. Salesforce, 192. Zeta, 22.
I think you may have taken the lead in our portfolio content.
I didn't. I looked at it. I didn't.
Open it, because you have mostly SaaS in your basket. So open it up, and you already had Micron. So
I'm starting to catch Amit. I'm at 60.56%. Amit's at 67.34. I'm starting to catch him.
Go to the right. Let's see. Where's Matt?
If I have a run next week, I may catch Amit, but Matt's still winning. Matt's at 76.96.
I thought his ASTS would go down a little bit. That could have helped you a little. But his Rocket Lab is just absolutely beast.
So we'll get the leaderboard out. So this is where we are. I was in dead last for half the year. I am back because of Micron. Chris was negative 12% at one point. He's at 31.89%. And Tanner, Captain Sleepy Time, who started scorching hot, has cooled off the way that he likes his bedroom at 66 degrees. Anyway, we will be running it back. My proposal will be in everybody's inbox today. We will go back and forth over the weekend. We'll be running it back pretty damn soon. And I'm excited to run it back because I got some ideas for this year.
Can you go on the tab that says versus SPY? So I built all of this stuff the other day. So basically, I wanted to see, like, as a collective portfolio, let's say we were 5 managers and we had like one singular portfolio with equal weights.
Pretty cool.
Everything. And you just scroll down, you can see where who beat what, how much did we beat by, and like collectively, how did we do with our picks? So if you just did equal weights, right now the total return would be 50%. If we do market weight, right, we're at 26.79%. Like that's what I think the S&P is Is it? What is the SPY at? So the SPY is 26.74%. For us, it's 50%. So, and yeah, so it's 50%. So we're up twice as much as the S&P if we had invested collectively as a 5%.
And that's with taking 5 companies that are down more than 50%.
Yeah. Yeah. Because we had crazy winners at the top also. So
look, we took some flyers also, but that's why being diversified works a lot of times, because you spread your risk out. And all these losers were paid for by some of the really big winners. I mean, we had collectively 8 positions that are up over 100%.
Yeah.
Google, look at Google.
Yeah.
I mean, you had Google and you had Marvell. Yeah.
Yeah. No, we all had our special winners that just kept things going, you know. So
that's it's really interesting, and I'm excited to run it back.
Yeah.
Let me ask you this.
Mm-hmm.
Looking back, is there anything that stands out to you that you're like, man, I should have known that this wasn't going to work out?
I wish I had done more research on Axon and their share compensation package. I was looking at just the raw numbers, and their like growth was just on another level. So I was like, oh, Axon's going to do fine. You know, ELF, I was hoping for a resolution to the China tariffs thing. So I had a thesis on that. I couldn't pick between Eli Lilly and Novo Nordisk because Eli Lilly was winning the market share in the GLP because I wanted exposure to GLP. But with pharma, it's always hard to make a concentrated bet on either one. So I was like, I'll just bet on both. Hope that, you know, the Novo Nordisk being a value play, people just get there. So if anything, it'll be flattish, and Eli Lilly will continue to grow as the businesses are growing. And I thought they would cancel each other out and maybe give me a little bit of health return. So I was a little bit of I don't want to call that chicken, but I chickened a little bit and just hedged. But what I did ultimately was lower my own return potential by doing that. So even though Eli Lilly won, you know, it did really well, Novo Nordisk pulled it down. So it's a wash. Other than that, I mean, my portfolio was a little bit more tailored towards defense, you know, so I wanted to grow. I did not think that like the contest was going to be 60-70% returners that you guys have had in your portfolio. I was hoping for a nice 30-40%. I thought that would be enough to beat you guys.
When I look back, the only thing I would change, I would not change, and let me bring it up so everybody can say it. I would not change for a second picking Meta, Netflix, CRM, or PayPal. I would 10 out of 10 every day. I would still pick those given the situation we were in. What I would have done differently is maybe not taking a flyer on MicroStrategy because I hate Bitcoin. That was more in case Bitcoin rallies, a proxy to Bitcoin as a huge alpha that if it doesn't work, I can probably make it up. And taking HIMS on the thought I could trade it to somebody. Amit made me an offer that I turned down. He offered me Apple for it, and I should have taken it. I was holding out for something better because I really thought Tanner wanted HIMS. And I was like, I'm going to try to outsmart everybody and try to pick something where I can trade up, and it caught me. And that's probably what I would do differently. I would have taken everyone. Like, I'm sorry. I'm not going to say I wouldn't have taken Microsoft at 479 or Meta at 702. I thought they both would have been up over a year. I'm not going to say I wouldn't have taken Netflix or CRM. I thought they would have been up. And I thought PayPal, you know what? I thought the bleeding was done. I don't get everything right. But my winners more than made up for it. So
maybe next one we can do shorting too. Like, oh, I want to short this. I want to short that and see where things go.
Just wait for the proposal. Be in your inbox in a few hours.
Okay.
It may be built in. It may be built in there.
Okay. Scroll up.
Where it's a bi-directional event.
Let's look at Matt's. Man, Matt's just, you got to give it to him, man. He went with the small cap and mid cap names. You know, no money. They're not making anything, but the story behind them is just immense. Like, ASTS and Rocket Lab. I mean, and you know what's crazy is that in his personal portfolio, he went extra hard on Rocket Lab.
Dude,
But I mean, that's why he deserves the
he
reward.
doesn't have a single position that's down by more than 25%.
Yeah.
Not a single position. All of us have stuff that's blown up. All of us.
Oh yeah. Nah, that's good. That's good picking, man. But the thing is, like, it's weird because technically speaking, he's got the ones that have the most risk also. Like Epsilon is a pharma company that's not really making any money. So it's literally hopes and dreams. Rocket Lab is cash flow negative, right? ASTS hasn't seen any real major revenue bump ups yet. You know, they still got to put things into the sky. Amazon, SoFi, like one of his worst is Berkshire Hathaway, which you can't, like, Celsius is another one that, like, Dutch Bros is there. Yeah, I mean, yeah, Matt picked a lot of good small caps that are like they're like about to inflect higher, and I think that's one of the reasons why he did extremely well. The question is now when we do the draft again, how are we going to structure it? I've started planning already ahead of time.
Oh yeah, you have.
I have. I'm like, bro, I'm not gonna look like this. Like this was like I got caught off guard with this one, but now that I know how you guys are investing, and if I have to beat you guys, I gotta turn it up a little bit.
Well, look, I am putting a lot of effort, and you've played fantasy football before, right?
Yeah.
Okay, so I've done fantasy football. I've done fantasy baseball. I am putting a lot of effort into my proposal. I'm going to make it super simple, but I'm going to make it where I think everybody who's participating is going to love what I'm proposing. And I think it's going to make it much more interesting. And I think everybody who follows along with this is really going to like it. So I'm excited to run it back. I really am. I'm getting excited.
Yeah. Yep.
So what are we looking at in the market? I know that you are kind of riding things right now. Look, I think you should be riding things right now. But is there anything that's starting to look appealing to you, or is it just more of the same for the time being?
I'm focusing primarily on Charter Communications, just trying to make sure I'm crossing my T's, dotting my I's, making sure that I'm not missing anything. I think they have multiple catalysts on the horizon, you know, and they've literally been in a downward trend for 5 years. They're down 80 something percent. They're literally like they're a giant debt monster with an equity stub. That's it. But the thing is, the way that these equity stubs work is that even if you get like a slight bump up in forward enterprise value, that equity stub is where all of that return comes to. And people don't realize that. So imagine right now you have a pie, right? And that pie is 90% debt and 10% equity. What happens is if the value of the company goes up even by 10%, right? What happens is that equity stub is where all of that value gets concentrated in one shot. So that's where you can actually see a giant move higher. And the thing is, I don't know if the market necessarily is recognizing that. And I think once the Cox merger is over, that should help a little bit. But more importantly, there's 2 or 3 other main factors that could help. Number one, lower interest rates. When you have a lot of debt on the balance sheet, any notion that future business is going to be less costlier to finance, it drops right to the bottom line. So your multiple re-rating can come from there. Another thing is mobile broadband ads. Like if you look at Comcast, their churn has been starting to kind of like moderate because of all the network upgrades that they've been able to make. And Charter, they're a little bit behind. So if you just look at the other competitor and the ability for them to reduce churn, eventually Charter is going to be doing the churn reduction too, just structurally. And so when that happens, I think the market's going to say, whoa, wait a second, like this is not going anywhere. It's actually going to do well going forward. And then the equity stub, like I said, is going to become a giant value up move. So And the amount of cash that they generate, the share buybacks that they're doing, they could buy back the entire company right now in 3 years. The entire equity portion in 3 years, completely wiped out just from the buybacks.
People don't realize how important that is for a narrative and how much that backstops a company.
Yeah. Yeah, it's like a coiled up spring right now at $140, $150 a share, man. Like I said, I'm fine with it. The other thing, Steve, that I'm not sure people may appreciate right now, but this is the same thing that people missed when it came to Verizon too, which was that it's not sexy. It's not AI.
Nope.
It's not this. But what happens is when the sexy part of the market is not as sexy, you know what people do? They look at the old ugly wife, you know? They're like, oh man, I need to go back to old ugly wife again. And people look at it like, oh, wait a second, Charter generates how much of free cash flow? Like, how much is their business do? You know, so right now everyone is focusing on top line, but eventually people will focus on the bottom line. And when, you know, if they're able to kind of do a couple of things and get people to re-rate it, I think it'll be up. It'll be up nicely.
Yeah, I'm warming up to Charter. I think Charter's interesting, and I do believe that linear TV is fine. I think that fiber optics, obviously, I don't believe satellite is going to be everywhere. Here's why. That thesis, they tried to make it play out with DirecTV. Didn't work too well.
Yeah.
I don't think that's going to happen with internet either. There's no
it's
evidence of it.
between latency, between the amount of interference during storms and all this other stuff, like reliability is not there. The locations that you have to.
I'm a perfect example. I could have got Starlink. I was actually considering getting Starlink instead of Fios. I decided to get Fios for my secondary internet instead of Starlink for that exact reason that Chris mentioned.
Where would you mount it?
My Fire Escape right there.
Yeah, but then you have to leave that thing outside in the elements the entire time.
I mean, when I'm using the computer for the streaming, like it would only be for streaming.
Okay, gotcha.
It would only be.
I think the other thing is like, what is the cost of it? The cost is the same thing
expensive.
Almost as
it would have been the
what
same.
What is it? $120 a month?
No, it's less.
It's less.
Hold on, I'll bring it up. The price surprised me. That's why I was considering it. It wasn't expensive. It starts at $55 a month.
That's not bad.
That not
bad.
So,
what's the latency on this thing?
So on 200 Mbps, it's 85. 100 Mbps, it's 55.
Yeah, 100 megabits, man. Come on, you're not getting HD
I was getting
streaming
30. I was getting 30 on upload with Spectrum.
No, that's fine, but that's what I'm saying with the symmetrical.
I get it.
No, but that doesn't say upload. Where's the upload? Look at the fine print. Scroll in a little bit.
You know what? I thought it was the same for both. Maybe it's not.
It could be. It's probably symmetrical.
I thought it was the same up and down. I could be wrong, though. But the reason I didn't go with it is because of exactly what Chris said. What happens if I'm streaming when there's bad weather out, et cetera, et cetera? I wanted Fios for that reason. So
the 100 megabits is not enough to do anything like any real good streaming. And that's the other thing too. Like the new cable plans, they're gigabit up, gigabit down. Bro, that's 4K streaming. And also if you need to upload, that's super fast uploads. You know, I think Starlink can actually work really, really well in some really, really, really rural areas where there is no connectivity, and it's also good for mobile. Like if you're like going around to different parts of the world and you need connectivity, I think Starlink could work really well for that. But in terms of like being able to replace cable completely, I don't think so.
Yeah,
So
no,
yeah.
no. All right. Anything else you want to go over? You want to call it?
I think we could call it, man. Life is good. Make sure
Things are
you
good today. I can tell you that.
Well, listen, whatever you guys are doing personally, just make sure you take a little bit of that money, put it on the side for a rainy day, take your wife, your kids, your
Oh,
family out to dinner. Because at the end of the day, let me tell you something. I would give up majority of today's gains if I could go back and spend time with my brother, my dad, and my mom going to Pizza Hut back in the day.
I
Like
get that.
we used to go to Pizza Hut in Queens, and I did not realize how special that was to me. We were poor, so we had to wait until you got coupons in the newspaper. So, but when we did get those coupons, me, my mom, and dad, and my brother, we would drive to this Pizza Hut in Queens. You would actually sit down. I don't know if these newer people know that you could actually sit down at a Pizza Hut. And my brother, we would play Samurai Showdown on the arcade. I was talking to my wife. I was like, man, I miss those days where you could just go and play at the
Dude,
arcades.
have you ever thought about buying an arcade machine with all the old games?
I thought about it. I've gone on multiple cabin trips, and when I've gone to the cabin trips, some of them have that. The thing is, it's not the same as back in the day where literally sometimes me and my brother would I would come home, we would walk to this one what is it called? You remember, what were the places called? The ones where you can car service. Remember back in the day, there used to be like all those places that had their own car service. So a
Yep.
lot of the car services, they used to have like those arcade boxes there. And what happens is all the kids and from around the neighborhood and even some older people, they would come to play the arcade there. And I remember I used to play Marvel versus Capcom. I was really good.
Oh my God. Same here.
Yeah, and so this one time, me and my wife, there was this bar in Williamsburg that had Marvel versus Capcom. And my wife was like, "Oh, we should go to this bar." I'm like, "Okay." And man, when I saw that arcade machine with Marvel versus Capcom, there were all these kids that came. Bro, I was just whipping that ass. I was whipping them, bro. Like somewhere along the line, the muscle memory just came back. I was doing air combos, like unlimited air combos. These dudes were just like, "Yo, where'd this guy come from?" Ah,
Well,
shit, I miss those days.
I
I
get
miss
it.
those days.
I want to end on this. You know how I'm crazy with the alternative assets, right?
Mm-hmm. Hey, babe, what's up? Sorry, go ahead.
PSA has officially, and Alex and I talked about yesterday on Alternative Asset Weekly, has officially paused their value tier due to
Mm-hmm.
demand spike. They have more than 10 million cards sitting in backlog that they have to get through.
Yeah.
This is crazy. The alternative asset market's going nuts right now. Very interesting stuff. And just to put this in perspective, on the value tier, that's $250 million of grading sitting in backlog. That doesn't even include the more expensive stuff sitting in backlog. This market is going nuts. Anyway, PSA is not a public company. It is a private company owned by collectors. Used to be public. Steve Cohen actually owns a large stake in it.
Someone was asking, who's your favorite fighter in the game? Bro, Spider-Man. Spider-Man.
Ooh.
Spider-Man was the bomb, dude. The amount of combos you could do with Spider-Man, dude, you could put him in this infinite loop. I liked Spider-Man was good. I also like Captain Commando.
I got
hot take.
Hot
Go
take.
for it.
Nostalgia-wise, Street Fighter 2 is my favorite, but
okay.
My all-time favorite one-on-one fighting game, without talking about like UFC or WWF/E, Tekken.
Tekken, yes.
360.
Yes.
Oh my God, it was so great.
Yes.
Tekken, baby.
Bro, me and Paul Phoenix, I used to hit people with that Phoenix Buster. That your entire life bar would just go from here. Yeah, man. Tekken was
Now,
good.
look, I know I say this all the time, I am seriously considering starting a second channel and just streaming myself playing video games and reacting. I am really thinking about it. There are so many nostalgia games. Killer Instinct was legit. And I'll tell you this, I'd be willing to make a bet that I played Zelda so much that I can beat the original Zelda in under 3 hours. I'm telling you, I have played it so much, I have it memorized. I'm saying I can beat it in under 3 hours.
You know what I'm looking forward to next month? Star Fox. They're gonna do like a remake of Star Fox 64. So they're just gonna be upscale, but dude, it's gonna be awesome. I'm looking forward to it.
All right, I'm going to run a poll. I am interested. Everybody that's still here with us, thank you very much. Would you actually watch me play video games? Is this something that I should do? I really want to know. We're going to run a poll right now to see if you would actually watch me play video games. I mean, Chris, we should get, do you have any systems?
Yeah, man, I got a Nintendo Switch 2 right here.
That's right.
I specifically got it so we could play what is it called? Mario Kart. Well, dude, I had no idea my wife was so good. So we started playing for a little bit and she just whooped my butt. And ever since then, my confidence has been broken. So I don't want to play around her.
Your confidence is broken.
Oh, it's so bad. She's really good at it. She's really good. And she didn't just beat me like by a little bit. She kept beating me, bro. Like, bro, she grew up with 2 Goonie brothers, so it kind of makes sense.
Wait, what did you just call them?
Goons. They're 2 tall goons, man. My wife's brothers are tall, so yeah. Oh, Sachin's here, bro. Serious gamers play on PS5, Xbox, and PC. I know Sachin. My thing is, like, it was more nostalgia. Like, these days, I don't really play a lot of like console games. I mean, I do play once in a while on PC. So Red Dead Redemption,
dude. How good is Red Dead 2?
It's really good.
It's really good. Oh my god, it's really, really good.
So Chris sucks at gaming. Yeah, man, I'm rusty as hell, bro. Rusty.
Yeah, I got Red Dead 2. Dude, one of my buddies and I used to play. So you know the game Age of Empires, right?
Loved Age of Empires, yeah.
So we used to play Warcraft 3, the RTS, $20 a game against each other. And we would do sets out of 7. Oh my God. Age of Empires is awesome. Love Age of Empires. Those are some of my favorite games.
Damn.
Love it.
Counter-Strike was good too. Like, growing up, man, we had some good games. I used to play Red Alert. Red Alert was good too. Red Alert 2. Command and Conquer. Red Alert.
Counter-Strike was legit. GoldenEye. Maybe I'll just do that start to finish one day. GoldenEye so good. Oh my God. I still say the bunker is the best level. I have done the bunker with just the PP7 for fun so many times.
StarCraft. That's right. I used to fucking play Brood War all the time. I mean, Wings of Liberty, like I tried getting into it, but no, I mean, I'm from the Brood War days. The Brood War days. Those were good times. Oh, man.
Chris, I feel like we may have to get a gaming channel going.
It's funny. I forget that you're around my age.
Fun. Just for the fun of it.
Steve, how old are you again? Sorry.
43.
You're all right. So you're like 2 years. So we're not like that much.
Basically.
Yeah, we're around the same time. So, okay. So that's what makes sense. I don't know why, bro, but I keep thinking you're older than you are, but you're definitely not. So.
No, I mean, 43. We should, we should think about this. There's so many good nostalgia games out there. Oh my God.
Yeah.
Oh my God. And then GTA 6 is just going to take over my life.
Yeah. I'm going to probably have to take a few weeks off. I think there's a lot of people that are going to take some time off to play GTA 6.
I have a theory. Even though Q4 is like the best quarter, productivity in the second half of November is going to suck because you're compounding GTA 6 on November 19th with the Thanksgiving holiday the following week.
I hope. This is the suggestion. This is the suggestion that I would honestly make to the people at Charter. bundle GTA 6. If you get a 1-year subscription, we will give you GTA 6 for free. I guarantee you, you will have 100,000, 200,000 people sign up the first day. Why? Because you need strong FPS. You need that performance, so you could just tie it in there. Oh, you want Grand Theft Auto 6? Here's the license key along with your 1-year subscription. They will get paid back in spades, dude.
That'd be crazy.
Yeah.
Crazy.
Someone's asking if we would play Take-Two. To be honest with you, I really looked at their numbers.
I hate the numbers.
I want to look at it, but it just...
The numbers are so bad. Here's the problem. I cannot handicap how big microtransactions are going to be for GTA 6 to make the numbers make sense of where they are right now. And I'm probably looking at it wrong, but the numbers are not great right now.
Yeah. I mean, it's got to be the funniest thing. Analysts are calling Take-Two out and saying your freaking projections are too low. Like, we know your what is it called? We know that you're kitchen sinking your own estimates. Take a look at this GTA 6.
That's awesome. Get us
Congratulations.
Get us some copies, Johnny Mill. Get us some copies. I don't ask for anything. Just get us some copies. Actually, screw the copies. Get us some cool, cool weapons for our characters.
Yeah, look at this. This was last year. Right here. Take-Two Interactive, GTA 6 unit sales estimates remain too low, says analysts. I mean, imagine when the analysts come out and say, no, bro, your estimates are way too low.
Yeah, I mean, I'm not surprised.
Right here. See, it's too conservative right now. Take-Two GTA 6 forecast feels too absurdly conservative. So Take-Two said said their net bookings would be $1 billion below Wall Street estimates. Nah, man, they're kitchen sinking. I have a feeling they're kitchen sinking this shit.
I think they have to be kitchen sinking it.
Yeah, Zelnick knows he has a monster hit on his hands and therefore doing fiscally responsible things by tempering expectations. In case any disappointment, it contains downside risk. In case of a blowout success, the firm looks even better. So maybe there is a play here, brother. Maybe there is a play.
You heard it here first, everybody.
I'll wait until September. You know why? Because we'll be so close to the launch. And then at the same time, the September spreads will be like the things will be out. The September options will be out. And maybe there's actually a spread play in this.
You don't think there's a spread play today?
No. Because the thing is, this thing has been delayed a few times. So I don't want to buy into anything. They delay this shit for technical reasons. And then we're back to square one again. I mean, that's one of the reasons why I'm not performing so well on the portfolio. That's been one of my laggards. Originally, this thing was supposed to come out in May.
Okay.
Is Virgin Galactic running right now?
I have no idea. It's not something I even look at.
Yeah, it's 26% higher today. Virgin Galactic.
Okay.
Look at this, man. I don't like seeing this, dude.
Neither do I.
Because this is obviously people chasing this thing. Redwire is down 6% today. Oh. See, like, look at all the spread. Not all the spread. Sorry. Look at all the space names. Like, they all caught a bit higher. Rocket Lab over the last probably like 6 months. This move up, which leads me to believe that this is like narrative-driven rally. Which means that if the narrative breaks, they could actually break down pretty badly to the downside. So that's exactly why I was telling Matt. Just buy some puts, man. Regardless whether or not this thing goes to the absolute moon, and I hope it does. You've done so well on the position. Just in case the narrative flips on you and this thing goes back down to like, let's say $30, $40, You know, you don't want to try to climb all the way back up to where you are right now. So, all right, I think that's it. We good.
Yep, we're good. All right, everybody. Thank you for joining. Really appreciate it. If you're going to go to Tannerland, spam him with, what are we going to spam him with? Stock draft. That's what you're going to spam him with because he's currently.
No. Here's a better one.
Well, what are we going to do?
Everyone should ask Tanner what the capital gains in Canada are. Dude, I swear the Canadians have lost their mind with their capital gains taxes. It's like 55%.
Yeah. I know.
Yeah. That's bullshit, dude. What the hell's wrong with these people?
Yep.
55%? Like,
capital gains. That's what you're going to spam them with. Capital gains.
And there's no such thing as long term. It's all the same shit.
Yeah.
It's not like, oh, you have a holding period, you get a discount for holding it long term. No, it's just here's 50%. It belongs to us now. It's Canadians, bro.
We would say that's un-American, but you know what? It's Canada.
It's Canada.
It's America, so it doesn't matter. He's just on the wrong side of the border.
I told him just sell some of your NVIDIA, buy yourself a Trump gold card, move here to the States. It's not Dubai, but shit, we're not going to charge you 50% of your income.
America.
50% in capital gains. Shit, 20% you get maxed out long term. All right.
And you can sell things to put against it.
Exactly. Come to America, land of the free and
Home
less taxes.
Home
of the brave and less taxes.
We went to war over this shit.
You know how much the tax was that they went to war over? 2%.
On tea.
When you look, yeah, on tea, 2% on tea. And we were like, fuck this. We're going to get rid of these guys. Like, just imagine that. Right now, everyone's like, oh, 35% is not enough. Tax the rich. And I'm like, holy shit. People fought back a 2% tax rate?
That's right. Crazy. All right, everybody. Thank you so much for joining. Really appreciate it. I will be back maybe tonight, definitely tomorrow. See everyone later.
Wait, hold on. Someone said it's not a 50% tax. It's 50% of your profit counts as revenue when you're reporting your income. I don't know what the tax laws are like. I just see 50% and I get all like bothered by it.
50% of something.
It's 50% of something. That's right.
50% of something, which is too much for me.
Vote to turn Canada into our 51st state.
Listen, I would welcome Canada with open arms. The amount of resources they have with oil and minerals. Come on over.
There's too many Indians in Canada. I want to keep the franchise. There's too many Indians in Canada. I'm sorry.
I want Enbridge to be an American company, everybody.
Can't do it. There's too many Indians in America now.
Enbridge, American company. Let's go.
All right. Later, guys.
All right, everyone. Later.